What's up, everybody? Welcome back to Stocks by the Numbers, and I actually have a couple of quick updates here, but I'll try to spread them out into separate, quick little videos here. The first one I wanted to look at here is Ammo Incorporated, ticker symbol POWW, listed here on the NASDAQ. Now, this is a company, again, that sells firearms, gun broker, and the sales have been kind of up and down. We've kind of been on this roller coaster ride, and we looked at the stock a while back here in 23. I know I was speaking about this support trend line. We were kind of in this sideways channel, as you see. I mentioned this key level right here looks like about 286, and we can see that it was back in October when that turmoil overseas in the Middle East really started to pop off, and that's when we saw the stock pop up here to 3. And then the company came out with earnings. We can see a miss on the top and bottom line. That drops us down. Looked like we started to wedge. I may have mentioned it in the Discord, and then boom, we have a pop-up here from sub 2 back up to 230. We come back and retest 2. We run back up to almost 3, getting back to this trend line. We pull back a little bit, boom, we pop back up to this trend line, and then we crater down here. Just the other day, the company reported earnings, and as you see, we missed here on the EPS side. Revenue coming in slightly above 40 million, beating by about 2.5 million, 6.6%. So the revenue seems to be kind of in line with what analysts were expecting because they came out with this loss here on the EPS side, posting this 5 cent a share loss. They basically took it to the shredder, right? And as we see, the stock hitting new lows here of $1.70, dropping big from it was about like 245. Now we're down to about 170. So if you bought this on dips of sub 2 or even low 2, 215, 220, I mean, yes, from a percentage point, you're down a chunk right now. But over the longer term, I have to say, I personally do still like the company. And I wanted to look at the fundamentals real quick because, in my opinion, it's only going to be a matter of time before the stock climbs back up. We have a market cap now of 209 million. We can see the EPS has kind of been hit and miss, right? 2 beats, 2 misses in the last 4 quarters. We had the big scare coming out of 2020. If you recall, that was the last election year, and we had the lockdowns, so the revenue started to chunk in for this stock. And even though it has technically pulled back over the last several years, I just want to remind everyone again, we are in an election year, and in my eyes, really, regardless of what happens, I think that we're going to see a next resurgence, that second wave of revenue and sales potentially coming into this company. Now, of course, anything can happen, nothing's guaranteed, but even pulling back here to about 145 million to close out 2023, we can see it's still significantly more than what the business that the company was doing just a couple of years back. So even though the revenue has pulled back, in my opinion, I do think the company is still pretty solid in the fundamentals, and I'm going to show you why. And first of all, I can appreciate the fact that something like the book value per share is slightly dropping down quarter over quarter, technically heading in the wrong direction. So I appreciate the fact if you personally have a red flag on this company, but I do want to show you that assets minus liabilities yields total equity, right? We know this. And we can see the equity, even though it has been slightly pulling back, the equity is sitting here at 356.5 million. The debt right now, the company's slightly paying down this debt here quarter over quarter, and we can see we went from almost 15.5 million, now we're down to 13.1 million. So if we subtract the debt from our equity, we're looking at about 343 million. Then if we come down here and if we look at the annual revenue that the company brought in last year, it's 145 million. So 343 million of positive equity, fair company value, if you will, in my opinion. That's the way I like to look at it. Again, not set in stone. This is just my opinion. But 343 million plus 145 million in equity gives us 88 million, right? So we're talking about, in my opinion, what technically should be roughly about a $500 million stock. And as we see after this big drop, the market cap is down here at 208.5 million now, currently with the stock trading at 1 3/4. Still red today, down about 2.25% currently, market starting to climb. But overall, in my opinion, I have to say, I do still personally like the stock. We're trading 1.5 times sales right now, which kind of was in line with where we were before we had the big run up. We're trading 6.5 times cash flow, not the highest we've been, but technically not the lowest we've been as well. But you can see after we hit about 5.5, that's when we went on a big run here and got up to 10 times cash flow, which, by the way, the company also has cash on hand, which I can get to in a second. But as we see here, price to book, trading 6/10 book value. That is the second lowest it has been going all the way back to Q3 of 22. So in my opinion, again, I appreciate the fact that they did miss on the EPS, so they wanted to chunk them down. Understandable. However, it may be an overreaction in the numbers. Now, certain metrics here, right, like our return percentages, are technically dropping down over the last couple of quarters. We can see something like the gross margin percentage has dropped down to sub 15% when it was up here at around 20 for the most part, even getting above 30 here at this one quarter. But we can see we were at 14.3, so we're technically not the worst it could have been. The operating margin still sitting here negative at about 15.3%. Not the worst it's been, not the best it's been. EBITDA pulled back negative 3.2%, coming from positive 17%. Quarter before was almost minus 12%, though. So that's what I mean. You know, we have these peaks and valleys here when it comes to this company. And again, reason being is because, thank goodness, there's not too much chaos taking place here in the States, even though it does seem like certain cities may have a lot of chaos taking place. But remember, also at the same time, a lot of these areas in the cities are quote-unquote gun-free zones, supposedly. So we know that, well, we don't really know, but in my opinion, we can speculate that if there is going to be a second wave of potential domestic chaos during an election year leading up to or even after the new president is elected, then this is what I'm saying. This is why I feel we may have a new surge of sales and revenue coming into this company in the second half of 24 going into the first half of 25. Now, again, looking at some of these numbers, we could say that they are mixed, but if we look at the quote-unquote fair value, again, looking at the actual equity of the business, looking at the revenue that they're bringing in, debt only 13 million, right? This is why I'm saying that over time, this stock, even if it gets back up to $3 a share, let's say, you're looking at roughly a 60% return from this level. And in my opinion, you know, the juice might be worth the squeeze here. And our inventory turnover technically has been climbing for the last couple of quarters. Asset turnover technically has been dropping, right? Because the assets are slightly dropping quarter over quarter, but the revenue's going down as well. So that's lowering our asset turnover ratio here. But also our debt ratios are staying in line or slowly pulling back because the company really isn't taking on any new debt here. And if we look at the historical reports of the company, we can see that coming out of 22 and 23 have been rough years for the company, which is why I'm saying potentially 24 and 25 could be the rebound years. And we can see that on the revenue side, they only beat 3 of the last 8 quarters. On the EPS side, they only missed 3 of the last 8 quarters. So we do kind of have this hit and miss situation taking place. So if you're looking at shares of POW down here at sub 2 and you're expecting, you know, 3 within like a couple of weeks or a month or so, realistically it might not happen. But if you're able to accumulate shares, build a position, and tuck this away for the longer term, then in my opinion we may have a winner here, and we may potentially be looking at $3-4 a share. Because again, here at 200 million, even if this gets back to, first of all, 400 million market cap would be about 350, right? But if we get up to that 500 million mark, you know, I mean, now we're talking about 4.25, almost 4.5. So in my opinion, I do think that that's basically the fair value of the company. And I think all they need to do is keep that EPS in check and be able to beat revenue here for a couple of quarters in a row. And then, in my opinion, the stock really should start to take off. And again, we can see The debt right here, almost 15 million, down to 14.5, 13.3, 13.4, down to 13.1. Technically, the free cash flow has pulled back almost flat, sitting here at plus 1.85 million. So that's technically the lowest it's been going back the last several quarters. You can see Q4 of 22 this time last year, a company had free cash flow over 15 million. Now it's less than 2 million. However, the cash on hand seems to be consistently climbing as well, as we see here, this blue bar, sub 40 million, 48 million, 49.5, 54.6, 55.6 million. So honestly, I didn't even take that into account either. So again, if we do total equity minus debt plus annual revenue, I think we got what, about 488 million. Now technically we should be adding the cash on hand to that number, which would bring us to like 535, 540 million, which in my opinion is technically the fair value of this business. And right now the market cap is only 210 million. So again, I know it was a big drop. I know some people might be bullish on it, some people might be bearish on it, but this is why, in my opinion, I like to look at the fundamentals, because yes, we have a big drop, and if you got in recently, it really sucks. But technically, on paper, the stock really should climb back up to where it was over time. Looking at the RSI here on the daily, we can see we fell off a cliff now. RSI down here at 23.25. We're below the bottom Bollinger Band of 196. The MACD obviously chunks straight downward, but the stock technically is oversold on the daily side with the RSI sub 30, and also the RSI here on the weekly now is down to 34, right? So if people want to jump in and supposedly just ride the coattails of this big move down, yeah, maybe we can see another down day or two, and we could drop down to 170, 162 or something and make new lows. But then in my eyes, that should technically bring the RSI on the weekly down to that 30 benchmark, and then we should get a little bit of a rebound taking place. And of course, the MACD recently crossed to the downside, and we're below this 50-day moving average, so we do have some technicals showing us that we're technically in bearish momentum still. But overall, in my opinion, I think the numbers are there, and I think if you're able to really scoop up shares on these big drops, and if you're able to tuck this stock away for a couple of years, then in my opinion, I think it may be a good idea. But that's just me. That's just my opinion. That's how I feel about it. And I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm, right? Helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.